Hello folks, Steve Lentz here with OptionVue and Discover Options. Welcome to this presentation on how to use TradeFinder to locate the best trades. TradeFinder is an immensely powerful tool that will find the best option trade given your target for where you think an asset is going to go. Bullish, bearish, or even neutral, TradeFinder will go through all of the options and piece together the spread or even just the long or short option, the trade that makes the most sense given your prediction for where the market is going to go. All right, so let's get right to it. Now, this presumes that you understand how to navigate your way through OptionVue at a rudimentary level. Okay, so if you don't yet know that, you may want to forego this, go through the tutorial videos briefly, and get acclimated. But otherwise, let's move forward here. I have a checklist that we're going to go through. And we'll begin with filling in the matrix with good data and modeling. So let's go to that. I'm going to bring up my program. Here I have Apple. Let's bring up a matrix for Apple. And we want to make sure that the prices here are fairly accurate and the modeling is okay. You've heard of the phrase garbage in, garbage out. Well, that's exactly what TradeFinder does. It needs to have good data. It's going to look at the data in the matrix. It's going to look at your target, piece it together. And if there are mispriced options, well, then it's going to tee off on those. And, well, let me just show you here. What we do is we're going to right-click on the existing position column, anywhere in one of these existing position columns here, and change it to %O/U. That's the percent over or undervalued. And that reflects how much the market price varies from the theoretical price. Now, you can see some down here are mispriced by quite a bit, 30% and more. Look at that. And so that could be problematic because if you have an undervalued option, well, it's going to find a spread that tees off on purchasing this option and perhaps selling a more overvalued option around it, for example. And so this is somewhat problematic. Now, you can play around by changing the model down here, going to the new variable and see if that changes it. And look at that. It did change it quite a bit, brought those in line. Now, we have to be aware over here of some now that's 24% overvalued by a little bit. Okay, we'll just have to be aware of that. And if you run into problems where the modeling is causing issues with the valuation here, you could go to each option on its own implied volatility. And you're going to zero these out. OptionVue is going to say that the theoretical value for that option is what the current implied volatility is. And it then just kind of locks it up. And it now assumes no change in volatility if the stock, in this case, moves up or down. Okay? That's the most harsh way to go about it, but the results won't be as accurate as if you were to use the variable. Now that said, let's go to the new variable. That said, though, there are times where options can be legitimately, priced off a little bit. And here we're at the end of the day on Friday. Here I am on a Saturday recording. We could go back in the middle of the trading day and see other examples, but just want to tee off on this a little bit. Also, we want to make sure that we have some other things buttoned up. Let's go to Model. We're going to make sure that we have some slippage being included here. All right, if you have no slippage, all right, it's going to assume that you're going to get exactly the market price. And in real life, of course, you're probably going to have to slip off that a little bit. So I like to go to Moderate just to make sure that I'm getting somewhat, some realistic results here. Now you could try it with no slippage and then go to Moderate and see how much it changes. That'll be eye-opening for you, especially if you're in a stock or an asset that has very wide bid and ask spreads on those option prices. Okay, now finally we want to make sure we have some commissions involved. So I have a video or a TradeFinder video account going on. I'm going to go to Info. I'm going to go to my security commissions down here and make sure I have at least some commissions involved. Some folks have no commissions showing, no slippage, and it, of course, produces results that would not be very realistic. Okay, now with that done, let's go to the other, what was our Second part, we have O/U. We're going to monitor that. We have slippage and commissions. Let's now open the price chart and set the target box. So with Apple here, we're going to go to the price chart like this. Oops, timeout. Didn't want to show you that. We have the price chart for Apple, and we need to now set the target box. It's a good place to begin. This is the target that TradeFinder is going to tee off on. So what we do is we can evaluate Apple and examine whether we're bullish or bearish, and then we're going to set the target box. So would you be bullish on Apple or bearish? Couple different ways to go here. One could say it's overbought. One could say that it's getting ready to spring up and make another impulsive move to the upside. We have an unfilled gap right here that you can kind of see with the candlestick. So maybe it's going to come down and fill that. And let's just put in, for grins, a bearish target. Now, I'm not suggesting that, but look at that unfilled gap. Wow, so this thing can have unfilled gaps. Well, that gap got filled. Took a while. Okay, so but let's say that we're bearish, that it's going to begin coming down, that it's kind of way over, and we might even go, look at this, we might even use some trend lines, build a channel here, and go, you know what, this thing, you know, it really needs to kind of come down in the lower channel before it races up. Okay, I mean, that's just one thing you might consider. Again, but there's a good case to be made for this nice triangle being a breakout to the upside too. But I'm just showing you this as an example. After you have some kind of an opinion, we're going to click on this red button here, Enable Target. We're going to bring up this target box, and we're going to bring it around to where we think price can end up. Now, these are the expiration lines for various weekly and monthly, possibly even quarterly options, depending on what your matrix has. But we're going to bring this box, and we can expand it, make it, resize it, etc. And we're going to position it to where we think price could eventually go. All right. Now, some folks might even take the box and spread it out to where it would include the stop loss. All right. That's kind of, I'm going to let you experiment with that. But let's just bring this down to where we feel the market is going to go. And I'm going to encompass here. Let's bring it over to there. We think price is going to drift down into this box here. That's our target box. And the borders are reflected right up here that you can see. So there we go. We have set the target box. Now our next step is to open TradeFinder and fill in the info within all the tabs. So let's go to OptionVue. Let's bring up TradeFinder. All right. And we're going to fill in these tabs here. So we go to Assets. And I'm going to click on this little one button that says Copy the currently selected asset. That's Apple. The next tab has my targets borders and time borders all filled in here. Isn't that nice? Okay, that's coming from the target box in the price chart. Next, let's go to the strategies, and I can select any strategy here I want, or I can just say select all covered, and we'll go ahead and do that one. It'll take a little longer to go through. I'm going to make sure that calls and puts are both being included, and I'm going to explore main strategies. Let's go to goals. I'll apply $2,000 to this. I could, of course, allocate more. Let's just see what happens there. I am not using this to include any existing positions or rolled legs or this or that. And I'm not doing straddle, strangles, condors. We can have it be culprit ratio, delta neutral. That's fine. Oh, well, that would be if we'll just leave it there. Filters. All right, once you get more advanced with TradeFinder, you can apply more and more filters. I like to have this down here, volume and open interest greater than 1. I want to make sure that it's looking at a contract that has some activity. But I'm going to leave the rest of these blank for now. Let's leave these blank for now. And then go here and leave these blank. Again, as you get more advanced with TradeFinder, you'll be able to go to town with all of this. All right, now let's hit go. And we're going to let it go through all of the strategies. And I'm going to put this recording on pause as we wait for it to go through everything. Okay, so now the search is complete. It took several minutes because Apple has a lot of contracts to sort through. Now you'll see here that we are ranking this list by expected return, and there are 50 trades listed, and it will rank them from high to low in terms of expected return, or ER. Now, before we get into this, we have to understand expected return. So let me bring back this, and I'm going to go to the next page here and take a look at this. So this is a graphic analysis screen, and I want to just get through expected return and make sure we understand that, because that's critical in your use of TradeFinder. So this is a graphic analysis screen of a broken wing butterfly. This is a very popular strategy in our Discover Options curriculum, our mentoring program. And what you'll have here is in this case, the SPX. The price of the asset is on the x-axis. As the asset moves up, we move to the right. As the asset moves down, we move to the left. And then on the y-axis, we have the profit and loss levels. Anything above the zero break-even line is gain. Anything underneath is loss. Right now, we are looking at the T+0 or today's line. You can see that one highlighted there. Let's move on to the next one. There we go. And now we're looking at the trade 10 days in the future. 10 days in the future right here. You see this? Most of it is above the zero break-even line. And there's something here called expected return, ER. What is that exactly? Let's go here. There we go. And what it does is it looks at 11 possible outcomes over the course of the bell curve. Now in TradeFinder, it's a little different. I'll get to that, but you have to understand when you look at just a given trade based upon the bell curve, it takes 11 possible outcomes and this is the bell curve down here. The purple is first standard deviation. The aqua is second standard deviation. You take the entire width of the bell curve, carve it up into 11 equidistant parts, and it takes the average of 11 outcomes from across the bell curve after each is multiplied by its probability of occurrence. And in this case, when you run through those numbers, we get an expected return of positive 1%. Positive 1%. And then there's other items here. You have the standard deviation. Let me drop that down. Standard deviation is a variance of those 11 outcomes. And underneath that, PP is probability of profit. That's the percentage of the bell curve with profitable outcomes. All right. Now watch this, though. In this particular strategy, we just love this strategy. It's not included in TradeFinder because it's quite custom, and there's a lot of parameters in how to set it up, and this is what we teach in our mentoring program. But you can see as we go to 20 days in the future, expected return climbs, probability of profit is solid, and then we get down here 4% expected return, 91% probability. It's just a wonderful, wonderful strategy to look into, and that's again taught in our mentoring program at Discover Options. Let's go back to OptionVue now and take a look at this. So if we were to take your target, the bearish target we have, and if that target were to come to pass, okay, there's 11 outcomes within that target. Okay, let's go back up here. There's 11 outcomes within that target in 3 different time frames: the front time frame, the middle time frame, and the back time frame. It averages up 11 outcomes in each time frame into one big expected return there. All right, and that's what we're getting right here. 10,346 is the highest expected return from any trade, assuming our target comes to pass within that box there. So this is a vertical debit spread. Let's go take a look at that by hitting Analyze. It's going to bring up the screen. And there we go. Now I'm gonna whittle this down just a little bit. But you can see here, let me go further. There we go. So our target box was way down here. This is 18 days out in the future. 18 days out. So we're kind of going almost to the little bit beyond the border of the second standard deviation, 18 days out in the future. This is a very, very bearish target, obviously. All right, and if we're right, this is the trade that will give us, on average, the highest expected return assuming this box comes to pass within, within those, including all 3 time frames of the box. Okay, $10,000. That's not bad. That's not bad. So let's go back, though, and take a look at other possibilities to, one thing that's interesting here is, we can also lose money. If we let it go all the way to 18 days, we could actually lose, $1,700. So let's go back, and we note here that the worst case return was a little over 1,800, which is what I just showed you. Best case return, 37. Wow, where's that? Look at that. That's way up there. 18 days in the future, way up there at over 37. So this is kind of giving you a bead on how your results relate to your target box. How your results relate to the target box. Let's go back and now let's resort. Let's say that you wanted to get something such that it entered the box, you would lose no money. So let's take the ratio of expected return divided by worst case return. Okay? So if we did that, here's one where even in worst case, we're still going to make over $700. The expected return is far less. This is a calendar spread, it looks like. Let's take a look at what this is. Let's go to Analyze. There we go. And here you go. So if the target comes to pass, okay, it's going to drift down here. And, of course, we're starting underwater due to slippage and commissions, it looks like. But if it comes down into our target box, it looks like over the course of time there, we're going to make money. Okay, no matter how far in the box it goes in the future, look at that. It's that's just a safer way to go. Now, of course, we didn't include a stop. If it drifts the other way, well, then presumably you would get out at some point. But this is the box as we have it now. Another way to rank these, but that's interesting, is to go to expected return divided by the standard deviation. Now, this is going to give us the standard deviation is very, very small. So if you were to do this, looks like a credit spread that's way out of the money there. Yeah, you're not going to, the standard deviation of those returns is very, 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 very small. So that might not be of help in this case. So, but that's something to look at depending on your target and just kind of take a peek at it. Finally, best case divided by worst case. That's an interesting one too. Looks like it's very similar to the expected. Yeah, it's the same thing in this case as expected divided by worst. Okay. Now, is that what we had there? Anything else we need to go through? Let me go back up. Look at our checklist. Okay, rank trades accordingly. Troubleshooting. Okay. If there were mispriced options, what you would find here, if there were mispriced options, you would have probability of profits in the 100%, and you would see some of the same strike, same contract located on several of these results. In that case, go to the matrix, take a peek at the %O/U, and you would know that you have a mispriced option. Just delete the prices in there and just remove it from consideration in TradeFinder. That's probably what that's what I do. When I check the O/U and there's a price that's bad, just delete the price from that cell, and it will not be considered in TradeFinder then. Again, I'm using 70-cent commissions. I have a fairly aggressive slippage going on. And if, again, you're getting crazy results that look like too good to be true, check out the %O/U, check out commissions, and check out slippage. Okay, that's in the matrix's model screen. Slippage as well. Go to model there. Okay? All right. I think that's it. All right. Folks, thanks so much for joining us today. If you have any questions, call your rep here at OptionVue. I should have put that on there, shouldn't I? Let me just type that in for you in case you don't know the phone number, all right? 847-816-6610. Okay? Great. Take care. Have a great rest of the day. Bye-bye.